Hello, everyone. Welcome to the Zcloak AI Roundtable. Today's topic is future finance, human-led or AI native. Over the last few years, we've seen massive changes happening across global finance. Stablecoins, real-world assets, on-chain liquidity, AI system, and programmable compliance. At the same time, one bigger question is emerging. Are we simply digitalizing traditional finance, or are we completely rebuilding financial infrastructure from the ground up? That's exactly what we will explore today. We will discuss the rise of stablecoins and RWAs, the future of compliance and liquidity, AI native financial system, and whether future finance will ultimately be human-led or AI native. Today, we joined an incredible group of builders and founders across AI, stablecoins, and RWA infrastructure. First, we have Brian Miller, CEO of Stable. Next, we have Alex, CEO of Degrade AI, and Tiger, co-founder of X Stables. Thank you for all joining us today. Before we dive into the deeper discussion, could everyone brief introduction yourself and your project? And please begin with the order shown in the image. So, Brian, let's welcome, please.
Sure. Hi, my name is Brian Mailer. Thank you for having me today. Excited to have a conversation with everyone. A little bit about Stable. We are a layer 1 blockchain that's focused on payments. With that, we have USDT as our native gas. We want to focus on reaching as many individuals as possible and helping fiat money move on chain for faster, easier online payments. And with that, we have a special focus on agentic payments, as our network allows for agents to run very easily and autonomously because of a single token. There's no gas token in our network. Instead, we use USDT. Thank you again.
Okay, thank you. Welcome, Brian. Let's welcome Alex.
Hi, this is Alex from Degrade AI. Thank you for having me here, and hello, everybody. So Degrade AI is a decentralized AI smart network. We are building an open, transparent, and community-driven decentralized AI network. We have one API, like the unified API. That API can call all of the large language models. So you don't have to go to different platform to use the AI tools or large language model. You just can you can access one. You can access all of the large language models from our API. And we have our unified smart marketplace. So providers, they can upload their large language models or AI agent for users to use. Yeah, that's pretty much everything. Thank you so much. Back to the host.
Okay, thank you for Alex. It sounds like the aggregator of the AI APIs. And let's welcome Tiger.
All right. Hey, everyone. Great to be here. I'm Tiger, co-founder at Xstable. And at Xstable, a little bit about ourselves. We're building a perfect X and aiming at the liquidity layer for real-world assets, aka RWA, starting with precious metal and Forex. The way we think about this topic is pretty simple. Stablecoins give crypto a much better settlement layer. They made value move faster, more globally, and more openly. Tokenization is now bringing RWA assets on chain. I think everybody knows that treasuries, commodities, credit, even real estate, and other assets, right? So, but there is still one missing layer that people sometimes underestimate. That is liquidity, because an asset being on chain does not automatically make it tradable. But from our perspective, the future of finance is not just about digital assets or AI native interfaces. It is about whether we can build real liquid, even institutional grade markets around these tokenized assets. And that is the part we're focused on. Back to the host. Thank you.
Oh, thank you, Tiger. And let's go straight to our topic directly, and it's about future finance. So, what does future finance actually mean to you? So, it's a simple digital finance, or are we witness a completely redesign of financial infrastructure itself? Maybe we can start with Brain first.
Sure. In terms of the future of finance, I know from our perspective and looking at how assets are moving on chain, we very much see that there's an evolution in the financial stack, moving towards a decentralized network away from the centralized permission systems that currently govern a lot of and control a lot of the flows of payments, which become a little bit too complicated for expansion. But in that open and programmable financial infrastructure that we see stablecoins really taking off, and digital assets being a new class of investment tools and assets moving between individuals, we see that it's addressing this very slow, time-consuming, and inefficient network. And we know that the future of finance really is about the key upgrades for both the users and the institutions. And with that, we see that no longer is there going to be constraints about the simple things like time of day and jurisdictions. Rather, it's going to be much more of the small, tedious things which increase the costs are going to fall into the background, and there's going to be more of an increase in terms of velocity of money. So in terms of the future of finance, we see that the velocity of money will be speeding up in the very near future. Thank you.
Oh, thank you for bringing that's very interesting perspective. And how about Alex? Would you want to share your opinion about future finance?
Yeah, to me, future finance means faster, fairer, and borderless money services to people in this world. Like it breaks old limits, like or less KYC, and the future finance let people control their own assets easily, and combine digital tech to serve real daily financial needs better. So pretty easy. So I think the future finance will serve the people, all of the people in this world. Yeah, back to the host.
Okay, thank you. Tiger, would you want to share your opinion about this?
Sure. I think both Brian and Alex touched on some really important fundamentals. And to me, I think future finance is, not simply digital finance. Traditional investment banks obviously view finance as capital allocation and market making. And while on the buyer side, hedge funds view finance probably as alpha generation and data-driven risk management. So a lot of finance is already digital today. Banks are digital, trading apps are digital, payments are digital. Most users are already interacting with finance through screens instead of physical branches. So I think the real shift is not just moving from offline to online. The deeper shift is that the infrastructure is becoming more open, programmable, global, and composable. And stablecoins are the clearest example. But I think the key point is this. So future finance is not complete just because assets are tokenized. And those tokenized assets still needs a market. And user needs to be able to enter and exit positions. So besides the settlement layer and the tokenized real world assets layer, and there's also, I think we touched a lot about this, and also Anna shared a little bit on Telegram today, the compliance side. So programmable identity, KYT, AML, and privacy preserving verification. And then there's this liquidity layer that we truly believe in. So so because finance is ultimately not defined only by the existence of assets, and it is defined by probably the existence of markets. So
Sure.
back to the host.
The exit is also very critical for every user and investors. Okay, so I know you guys, some guys focus on we have a different focus across the stable coins or RWA or AI native system. So Are we truly entering a new financial era driven by the stablecoins, tokenized asset, and the AI native system? How do you feel about the process of the new financial era? Maybe Alex can start with this one.
Oh, yeah, sure. So my answer is yes. These three elements, I think, they are helping or they are pushing finance into a brand new stage. Like they speed up the asset flow for sure. They cut costs. They improve efficiency and create brand new financial modes we never had before. And like as we can see in Hong Kong, they just issued the stablecoin license to two institutions, and I think there will be more in the future. And let's say something big. I think it will start from Hong Kong, and maybe several years later, it will move to mainland China. And yeah, for sure, like it brings the finance to a whole new stage. Back to the host. Thanks.
Okay, thank you, Alex. So, Brian, you are building the infrastructure of stablecoins. What do you think about if we are entering a new financial era?
Definitely, I think from Stable's perspective, we wholeheartedly believe that we're entering that new financial era with stablecoins at the center of that. I think, as Alex was mentioning, is that we've seen a lot of growth in terms of the jurisdictions across borders. Things like the Genius Act and hopefully soon with the Clarity Act in the U.S., which is giving more comfort to other countries to implement their own legislation in those jurisdictions. So we've seen upticks in South Korea, in Japan, for example, and we hope to see that trend continue. So while there's a kind of like a shuffling that's going on in terms of the leaders of the financial world, we hope to see that digital transformation of finance continue to grow because we feel like it's already here. As Alex was mentioning, a lot is already online and digital, and we're not using hard currency anymore. So while it's really digital now, we see the digital assets being the next part of that, where you are able to control and use and program money on chain and have that growth. So we do see that presently here and continuing to expand. Thank you.
Cool. Okay, so Tiger, how do you like this question?
Well, yeah. So I think we're definitely entering a new era. I would not describe it as one single wave, but I see it more as several layers maturing at the same time. Obviously, stablecoins are already the settlement layer of crypto, and they're probably the most successful real financial application in the industry so far. People use them because they solve a real problem, moving value globally, quickly, and with much less friction. And tokenized assets are becoming the asset layer, right? We're seeing treasuries, commodities, private credit, real estate, and other assets being brought on chain. And AI may become the interface and automation layer, hopefully. It can help users understand markets, generate strategies, even monitor risks, and eventually execute within defined rules. Right. So yes, I think stablecoins, RWAs, and AIs are all important. But I think the real opportunity and challenge is probably in the connection of those chances. And stablecoins, provide settlement, but liquidity turns all that into markets. And we think the next financial system will need venues where tokenized assets can actually trade at scale. Yeah, back to the host.
Okay, thank you, Tiger. So you talked about the liquidity and the compliance. So what will define the next financial system more deeply? Is regulation or technology or liquidity? Yeah, it's for Tiger.
Oh, okay. So I'm sorry. The next question, right?
Yeah.
Whoa.
So
Well
you
defined it. Okay. Yeah. So I guess so regulation, technology, or liquidity, all three probably matter. And I don't think any serious financial system can ignore any one of them. So regulation matters because finance touches real capital, real users, and real risk. And without some level of regulatory clarity, institutions will hesitate to participate. And, and technology matters because it defines what is possible: blockchains, smart contracts, ZK, oracles, AI agents, and new execution layers all expand what financial system can do. But if I have to pick one of the, as the deepest tasks, I would say not just me, but our organization wholeheartedly believe in the liquidity because that's what makes a market real. And regulation can allow a market to exist. Technology can make the market faster and more efficient, but liquidity determines whether users can actually trade. So without liquidity, there's no efficient execution. There's no real price discovery. There's no meaningful risk transfer, no confidence for larger participants. And that is especially true for RWAs. Yeah. So I would frame it this way: regulation gives us the permission, and technology gives capability, and liquidity gives life. And the financial system without liquidity is just infrastructure waiting for users. Yeah, that's basically what I thought about this question. Back to the host.
Yeah, very formative. And Brain, how do you what will define the next financial system more deeply? Regulation, technology, or liquidity?
Yeah, I think he did an excellent job of answering that and how those three sectors flow together. It definitely is the regulation, as I was mentioning earlier. And to kind of build on what he said, the Genius Act really saw the increase of flows, so that brought the liquidity. And then for the technology, I would say, while it does come in his line second, I would say it also had to be there early on before the regulations to give comfort in the trials and the testing. So I would say the technology proved itself, and therefore the regulation supported that, and then the liquidity. But I definitely agree with the liquidity is always at the end because you can't get liquidity without the regulations. But I think those all are very important, and I would definitely agree that the regulation was the cornerstone to get that off the ground and get that launched.
Yes, agreed. Thank you, Brain. Alex, do you agree with the sentiment or opinion?
Yeah, of course. Like they are very professional, and like for me, there's actually nothing to say. But yeah, for sure, the liquidity truly decides how active and wealthy the whole financial system can develop. So yeah, for sure, the liquidity is very important, and the technology, I think, is not very hard, because the AI coding is very popular right now.
Yeah.
So like, I don't think that technology will be a problem. And regulations, I think like it takes time, but it will eventually come. And like there will be very clearly regulation rules to for the whole industry. But like after everything is all set, like for sure we need liquidity to provide services for users. So yeah, that is the very important part, and like it cannot be solved. The problem cannot be solved by AI or regulations. Like so that's why it is the hardest one to solve. Like to me personally, yeah.
Thank you. So yes, technology is no longer the difficulty since we have the codecs, we have the AI tools, and the regulation is a cornerstone, and liquidity is always come to end, and then everyone come here is for the liquidity. And let's move forward. And we which real world assets are most likely to succeed on chain first? Because I think you all guys, there is a different RWA on chain or in the SEX. So which real world asset will mostly succeed? Or treasures, or real asset, credit, or facts, or private liquidity, or perps? What do you think? Brain, can you give? You do want to take a start with this one?
Definitely happy to jump in. I would say right now, like which assets we've seen the most success with is how I'm going to measure that. So right now, the markets have really been pointing towards Treasury as I would say, like a clear winner with the highest volumes and the most institutional interest. But I would say that classifying them as a winner is only going to be short term. I'd say the real tokenization of assets over time and on chain will most likely be incorporated into like the new financial infrastructure. So I think things like maybe it's debt or maybe it's factoring from invoices. I think there's going to be new asset classes that are going to come on chain, and that's really going to take the lead in terms of like what the winner is going to be on chain for real world assets. But I would definitely say right now we see the most volume, whether it's perps or treasuries, is getting the most attention right now.
Okay, thank you. Thank you for Bray. Alex, what do you like? Which asset will be most successful on chain?
I will pick treasuries because they carry a very low risk and steady value, and they are well recognized, easy to trade, and match the demand of the capital flow perfectly. So I think the treasuries for now will be the best choice.
Okay, sure. Yeah, yes, a lot financial institutions, they are looking forward to investing in the treasures, and also the treasures or RW treasures is the most. I think it's the most compliant RW for now. And Tiger, what do you think?
So we spent a ton of time thinking about this before launching our project. So I think we will agree the first successful RWAs will share a few characteristics. One, they need to be globally understood. Second, a transparent pricing. Third, they need existing demand. And fourth, probably they need enough market depth in the real world so that on-chain markets can reference or connect to that liquidity. Which is why I think commodities, FX, and treasuries are strong early categories. And treasuries, like Brian said, are already showing product market fit from a yield perspective. But from a trading perspective, I think gold, FX, and commodities are especially interesting. Gold is a very natural asset for on-chain markets. It is globally recognized, has a clear reference price, has deep spot and derivative markets. It has strong demand from both retail and institutional users, and it is already traded heavily through leverage products in traditional markets. And from that point, FX is similar. And the challenge is definitely not creating demand from zero. The challenge is just building a better trading experience, lower friction, better access, crypto native UX, transparent settlement, and eventually deeper liquidity. So my view is treasuries may lead from the yield side, gold, FX, and commodities may lead from the trading activity side. And over time, once liquidity infrastructure matures, we believe more complex assets can follow. Thank you. Back to the host.
Okay, thank you for Tiger. And the treasures, facts, and companies, there's some big institutions that are interested put the money in this kind of fund, and but for now we don't have the super bloom of the RWA. The super bloom of the financial system. So what do you think the biggest obstacles preventing the RWA from scaling global today? Is it compliance or identity or liquidity or regulation or user trust or user experience? So Alex, would you come first?
For this question, I think the core barrier is liquidity and user experience. So right now, the on-chain and off-chain capital cannot circulate smoothly because for sure there's no clear regulation. And for a large company or listed company, they have to follow the regulation. But right now there's no clear policies, so they don't know how to do it. And also right now, like RWA is lacking professional, advisory institutions to help this company to transfer their assets to RWA on-chain assets. So that's the problem of liquidity and lack of active trading volume also limits assets conversion, restrictions transaction scales, and stops RWA from growing larger worldwide. So yeah, so like there are still a long way to go because for the large companies, they don't know how to do it. For individual investors or small investors, they have no idea how to buy it or what is the legal way to trade this RWA. So liquidity policy and user experience, I think they are the obstacles right now.
Okay, thank you for the opinion. And Brain, what do you think is the biggest obstacle for scaling the RWA?
Yeah, I mean, I agree with his sentiment. It's really going to be that regulation. While it stands to provide like the most benefit, and it carries the most, it also carries the most risk in terms of adoption of those RWAs. If the governments are able to view the assets favorably, or the banks, institutions, therefore the banks and institutions will most likely jump on board and take advantage of those new asset classes that are come available to them. But if regulation views them as too volatile or risky, those institutions are most likely going to be too adverse to risk to adopt them. It's going to create, a broader delay in adoption. So I'd say that regulation is really going to be the issue for those RWAs, but also I would say is liquidity comes into a big play. I think we've seen that with some of the assets already. Primary markets or first issuance for RWAs in some classes do perform very well. Unfortunately, in the secondary markets or post-issuing, those RWAs do not have the same liquidity value. It's the assets aren't necessarily needing to be on chain. It maybe creates a more of a cumbersome process. So I would say regulating new products that perform well on chain is really what's going to be the standout. But I think things like compliance and identity, those are going to be inherent. I think with smart teams such as everyone on this call who's building products to bring things on chain, those become just part of the cycle. Having proper compliance tools and having identity checks, I think that's going to be mirroring what's going on in the traditional markets, and I think that's going to increase that adoption over time.
Cool.
Thank you.
Yeah, sure. That's very important for the obtain the user abroad. And so, Tiger, what do you think which is the biggest obstacles for scaling RWA globally?
Yeah, just kind of echoing what both of them just said. The common answers, are compliance, regulation, identity, and trust. And all of those are real. One of the biggest obstacles is obviously liquidity fragmentation. Today, many RWA assets exist on chain, and they don't really trade that much. They are fragmented across different issuers, chains, custodians, protocols, and user bases. And one issuer may tokenize one asset on one chain, another issuer may tokenize a similar asset somewhere else. So liquidity sits in separate pools. This bizarre situation, and users don't have a unified venue, and market makers don't have enough concentrated order flow. And the result is that the asset may technically be on chain, but the market does not reform. So if users cannot enter and exit efficiently, if market makers cannot hold with confidence, and there's no reliable secondary market, then the asset remains a what I think packaged product rather than a real market. And user trust is connected to this as well. User trust markets when they can see real execution, real pricing, and real liquidity. And institutions also care about this, right? They would ask, can I trade size? What is the slippage? What happens during stress? Who provides those liquidity? What is the risk framework? So yeah, I think the next stage of RWA is not only about issuance, it's about the market formation. That means liquidity aggregation, execution, pricing, risk management, and market structure. And that is where I think the industry still has a lot of work to do. Yeah, back to the host.
Okay, thank you for the Tiger. It's very a critical problem for everyone that we talk about compliance, user experience, and the liquidity. It's mostly we focus on these three aspects that stopped us from the investing on the RWA on chain. And also, everyone talk about the RWA. Everyone talked about the compliance, and you know, the Web3 investors, they value the privacy. And can privacy and compliance coexist? Or what do you think in the RWA era, what do you think the KYC or ML will involve into the programmable? Also keep the privacy system powered by the key technology or any other technology. So I believe, Brain, can you start first?
Absolutely.
Yeah.
You know, in the world of KYC involving to something that is programmable or preserving on the ZK technology, we definitely see that happening. We actually see that privacy part of transactions providing a key value for institutions and the similar on the layer that they need to operate on. I think blockchain's transparent nature as a whole is great, but a lot of fintechs and banks do need or do want their transactions to be private for very good reasons. Obviously, it could put people at risk. It could put assets at risk. So I think there is a very good need, and you know, I know people on this call are building those processes and building up the technology now. I think that it's great, and it's going to be coming in a compliant format, let's say. But I think also the KYC and AML will still exist, but it will most likely continue to evolve and meet the standards that are put forth in regulations, as we've been talking about on the call, and have a way of interacting and performing at a higher level than it currently does now. I think right now it's a fairly broken process. It's a lot of tedious paperwork, and it's a little bit slow, and it's ripe for errors. But I think being able to do it on chain solves a lot of that, and I think it will be, you know, when it's built in, it will be a much better process for everyone involved.
Since Tiger also thank you for bringing. Since Tiger also building a kind of the exchange of perps. So what do you think about the KYC and the KYC and the AML?
Yeah, so I think this direction makes a lot of sense. Traditional KYC is very, very happy. Users submit, sensitive documents again and again. Personally, I've submitted like passports, IDs, address proofs, bank statements, even selfies, and that data sits in a centralized databases, and each database becomes a privacy and security risk. At the same time, we cannot pretend finance does not need compliance. If RWAs, institutions, stablecoins, and cross-border flows are involved, some form of compliance is unavoidable. So the future is probably not KYC or no KYC. The more interesting direction, what I thought it's going to be smarter compliance. ZK and programmable identity can help here. Definitely, a user may be able to prove certain facts without revealing all personal information. And for example, I am not from a restricted jurisdiction. I am, not on some sort of sanctions list, and this wallet passed a risk check, and this user has completed verification with a trusted provider. But the application does not need to store the user's full ID information. And this is very important for future finance because we need both sides. Institution needs, they need risk controls, AML, and compliance. And users want privacy, speed, and self-sovereignty, right? Programmable privacy preserving compliance may be the bridge between those two needs. And for RWA specifically, I think this becomes even more important because RWA sits closer to regulated financial markets than most crypto native assets. So if we want RWAs to scale globally, we need compliance systems that are not as heavy as traditional finance, but also not completely absent. And maybe ZK can make that possible. Yeah, back to the host.
Okay, thank you, Tiger. Yeah, it's a future that the programmable KYC or KYA or KYT to be adopted in the RWA financial system. And so let's move to the last question at the agent in the financial system. And as agent become more autonomous, and will they eventually participate directly in financial system? And please also let's welcome you to share more AI adoption status on your project. Brian, would you come start first?
Definitely. I think the answer is fairly simple from our side. I think it's 100% that AI agents will become autonomous. And I think one of the biggest use cases, I think that's going to be one of the biggest use cases that will be unlocked for AI as a whole. We've already seen the transformative power of AI in places like coding and software development. And it's highly likely that that will continue in terms of the financial space, because it's easy to see what the benefits are from using that technology at its core. I think the barriers that are here right now are largely related to new technology interacting with old technology like banking. Those systems are usually fragmented or using even outdated technologies when it comes to Cobalt databases and Cobalt servers. But I think an area where stablecoins and digital assets are going to really excel in terms of the AI space is going to be that they're able to provide a solution that allows those agents, when they're acting autonomously, to have proper rules and guidance in place and be able to do that extraction that's needed to execute whatever the goal is. I think right now we have a lot of the cumbersome when it comes to using, let's say, digital assets or digital currency not on blockchain, is that there's a lot of need to check for fraud, check for correct numbers, do a lot of manually checking. And I think when you're in an AI space that's using blockchain that is, immutable, you're able to remove a lot of that slowness, let's say. So it gets to be a much faster, easier network that I think as costs are going to be cutting down in the future, I think that's where AI agents on chain are really going to provide a huge value.
Okay, great. Thank you for Brian. Tiger, how do you like the AI adoption in your system, and will the agent trading become eventually be participant directly in the financial system?
Well, yeah, I think they will. Actually, I think finance is one of the most natural environments for AI agents because this field already runs on data execution, monitoring, and decision making. And a lot of trading today is already semi-automated anyway. So it's not hard to imagine AI agents helping users manage portfolios, markets, rebalance positions, or execute strategies even. And honestly, some users may eventually trust AI agents more than themselves in certain situations. I think especially for things like risk monitoring, market scanning, execution speed, or portfolio management. But I think people also underestimate how sensitive finance is. If an AI agent makes a bad trade, loses money, or interacts with something it should not touch, the question becomes who is responsible. And that is where things become more complicated. So personally, I think the first real version of AI finance will not be fully autonomous agents running wild. It will be AI probably operating inside human defined boundaries. For example, users sets the risk limits, users define permissions, and AI helps execute and optimize within those limits. And that feels much more realistic to me in the near term. And actually, this is where identity and compliance infrastructure become important again, because if AI agents are going to participate directly in markets, the system still needs to know what this agent is allowed to do, what risks it can take, and who is ultimately accountable. So yes, I think AI agents will absolutely become part of financial system, but probably first as co-pilots, not fully independent traders. Yeah, back to you, Anna.
Okay, thank you. We are looking forward AI agent to participate in the financial system, and also Zcloak building the AI agents infrastructure for the financial and business operations. We providing the enterprise AI brain and the digital employees for the institutions. So today, thank you for everyone joining today's discussion. We covered stablecoins, RWA compliance, global regulation, and AI agent, and also the future architecture of the financial itself. So future finance may not simply digitalize the existing system. They may completely refine the trust, compliance, liquidity, and the value transfer. Thank you again for all the speakers, and thank you for everyone listening today. See you in the next AI roundtables.